Well, welcome everybody to the final third panel of the day, the Sustainable Business and Social Impact Conference. We're glad to see you all here for a panel called Bringing Microfinance Home, Adapting for America. Our moderator today is going to be Aaron Gress. Aaron is a first-year student here at Bucla, and before joining Bucla, he was in Peace Corps in Ecuador. He's also worked at Developing World Markets and has volunteered at Axiom USA, which you'll hear a little bit more about during our domestic microfinance conversation. So I will turn it over to Aaron.
Thank you, everybody. Thanks for being here today. And whoops,
Cover your computer.
Yeah.
Oh yeah. Okay, that'll be a double tragedy. So let's just get
Thank you to the panelists for
moving right along.
coming, and we're here today to talk about an interesting topic that is bringing microfinance home. Some of you, and all of you, after we show a brief video, will understand what is microfinance internationally. Some of you have maybe heard about Muhammad Yunus and the Nobel Peace Prize in 2006. I think that really put microfinance on the map internationally. But as we have turned into a financial crisis here in the US, a lot of focus has come domestically. How can we give access to finance to those low-income entrepreneurs here in the States? We have high unemployment too, and we have businesses that are not being able to attract capital. So how can we bring microfinance home is what we'll be talking about today. And we unfortunately don't have any pupils here on our panel, but I wanted to introduce them to Bucla culture, which in my opinion is we take our work very seriously, but we also don't take ourselves very seriously. So in the brief introductions, I'm going to give a general overview of their backgrounds, but I'm also going to tell a fun fact about them that will hopefully add some light to the conversation. So to my left I have Jeff Ash, and Jeff is the international 30,000 foot view and also the domestic view of microfinance. He's worked internationally, he's worked domestically, he's started microfinance organizations internationally and domestically, so I'm really looking to you, Jeff, to make that bridge, if you will. Jeff, a fun fact, was a Peace Corps volunteer in Ecuador as well, which we found out last night, a couple years before me.
Just a couple years.
Maybe like the second or third year of Peace Corps. He wrote a book. I won't tell you what year that was. He wrote a book about revolutionary farmers in Ecuador in the 1960s. I'm guessing like Che Guevara type farmers that you were working with.
Yeah, but nobody got shot.
Nobody got shot. So thanks for joining us. And then we have Tracy Ward here. She is what I would call kind of on the front lines of microfinance domestically. She works at Self-Help, which is headquartered here in Durham, and now spreading, or has been spreading for a while, nationally. Tracy drove a NASCAR, has driven a NASCAR 139 miles per hour.
I'm a North Carolina native.
Yeah.
So that makes that more understandable.
Cool, thanks for joining us. Tammy Howdy is what I would call our ecosystem builder. She has been working at the U.S. House of Representatives. She is now working at the Association for Enterprise Opportunity and focusing a lot on how to make our ecosystem, some of the legislative measures, more friendly to economic opportunity and enterprise opportunity for low-income entrepreneurs. She has missed a flight on a business trip in Cambodia because rebels were shelling the airport. But she survived, and that's the good news. I don't know if that's a fun fact, but it's a fact. But now that we I've lightened it up a little bit here. We are going to show a brief clip. This is from a Duke University student who is hopefully going to lay a baseline for us about microfinance internationally, so that we can then draw from this and talk about it domestically. Cue the film.
Little transition.
We arrived in Asunción, Paraguay, looking for entrepreneurs, local entrepreneurs, businesswomen, borrowers, and microcredit. It's the development tool that has gripped the world with a promise of empowering women in even the poorest communities. Our point of contact on the ground is a Fundación Paraguay, a microfinance institution, or MFI. An MFI is a local bank that gives out loans to women to start businesses. The loan is similar to one you get in the States, with a few caveats. The interest rates are higher, and the target is almost exclusively women, a demographic that owns less than 1% of the world's property. And the loan is often given to a group rather than to an individual. The guiding principle behind microfinance is that credit is a right that everyone should have access to, regardless of wealth, location, and most emphatically, gender. Women with no history of financial experience are encouraged to borrow money and turn an existing skill into a profit-generating business. Anything from dressmaking to raising hogs. Since its inception in the 1970s, microcredit has grown steadily, but over the past decade, it has exploded. There are now more than 10,000 MFIs worldwide. At the Fundación, we met Paulina Portillo. Paulina is a mother of 9, wife of a farmer, and the president of her committee. Her family lives on the side of a 2-lane highway outside of Ica, a small town 25 miles from the capital city of Asunción. Paulina's business is baking pan de miel, a sweet bread made from sugarcane. Her husband Juan and their sons grow the cane in a field down the road from their house. They even have an early 19th century U.S. railroad component made in Buffalo, New York, that they use as a cane processor. Paulina runs 2 small stands, one on each side of the road. When a passerby pulls up to buy some honey bread, she quickly runs out to make the sale. Despite living on the highway, the family has no car. They once had a trucking business, but had to sell the truck when they discovered a tumor on the abdomen of their youngest child, Matthias. To help pay the medical bills and keep the family afloat, Paulina took out her first loan and started the bread-making business. Now she walks everywhere. Every week, she walks to a committee meeting a few miles down the road. As president, she is responsible for the management and repayment of the group's loan. The committee is designed as a system of checks and balances, as each woman is dependent on the next to pay back their loan and build a strong credit rating. If any one woman defaults on a loan, interest rates are likely to increase for the whole committee. On this day, the women are organizing a hot dog fundraiser to compensate for a fellow borrower who is 8 months pregnant and unable to work. They make up tickets that they will sell for the event. The appeal of microcredit is its promise of empowerment. It is by definition not charity, but rather a loan that can sustain a business, a family, and a community. It can be especially appealing to those who are skeptical of traditional modes of development. You can now go online and read the story of a businesswoman in Kenya, Honduras, or Uzbekistan, for example, and pledge a loan towards her enterprise, which she will pay back to you over time with interest.
Excellent. As I said, it's good to know kind of what is the baseline that we're starting from when we talk about bringing microfinance home to the U.S. And so here's the baseline. There's a woman, Paulina Portillo, and she's in a borrower group. Jeff, you've got experience overseas. Maybe we can have each person talk about how is this different than what you're seeing domestically, and how is your organization playing a role in domestic microfinance?
That's a segue to me.
That's a segue to me.
I wasn't quite sure. fascinating to see this video from the Fundación Paraguaya. Actually, they're using a mechanism called the Solidarity Group, the Grupo Solidario, which when I was doing some early work in microfinance back in 1980, we discovered in a credit union, interesting enough, not in a microfinance institution, in El Salvador called Fedicredito. And it's the exact same mechanism as you see represented there, of a small group, their associación as they call it, or the solidarity group, but the 5 women coming together, and as long as everybody is up to date on their loans, they have access to more loans. If anybody falls behind, group pressure keeps loan repayment, or if they're paid for, etc. So we introduced it to Acción and spread it around. Paraguay was one of the places back years and years ago. Starting in Dominican Republic, República Dominicana, and they're spreading it in every single place they went to. Said, this is impossible, it'll never work in this country. It'll work in Dominican Republic because the Dominicans are thus and such, but the Colombians are not this way. So we went country by country and spread this model. So I left Acción and did some other things, and then I said, well, let's try this exact same mechanism. So we pirated the methodology from Fedicredito, another credit union, applied it to throughout Latin America, and then I took that same methodology and brought it back to such places as New Hampshire, where the license plates say, live free or die. Now, what an inauspicious place to form a solidarity group of people helping out each other. But this was the genesis of working capital, which was the direct transfer of this methodology from Acción, with a little thrown in with village banking from FinTech, and applying to the United States. So it worked quite well through New England, but particularly well in the Dominican community of Lawrence, Massachusetts, where there was a tremendous resonance of this methodology, and we were able to make microloans to lots of people that were illegal immigrants, all starting with loans of $500 and we're actually up to $5,000. So this worked quite well. We franchised the model, spread it around, kept it to the West Bank and Gaza Strip and Hidden, and it went well. But this is all about microcredit. Should I go? I'll stop with it. I can do the micro savings story later.
What's the micro savings?
Yeah, let's stop with. We now have the microcredit in a nutshell. But then I'll just pass it on before we get to micro savings.
Well, then I'll talk a little bit about self-help's experience with microfinance. And ours is all domestic. So self-help was founded in 1980. We've been doing small business loans and home loans since the early 80s. And we're essentially a group of organizations. Self-help has a state-chartered credit union. We have a federally chartered credit union, which is based in California. We have a loan fund, which allows us to do some lending through an organization that is not as heavily regulated as a credit union. And we also have the Center for Responsible Lending, which is a self-help affiliate which works to prevent and help rein in some abusive lending practices. And so our experience with microlending has primarily been in the state of North Carolina. Over our history, that's where we've been located in most of our small business and microlending. And our model, it's interesting sort of in thinking about translating the international model for microcredit to the U.S. There are organizations in the U.S. that do a similar model as Jeff was talking about and as shown in the piece, sort of a peer group lending. So the group of peers who each work together either for individual loans within that group or one loan at a time for the group, that they're sort of all responsible. It impacts all of them if it's not paid back. That is a different model than what self-help has used. Ours is much more individual. On a macro level, it's similar in that we're clear with our borrowers that we need them to pay us back, because if they don't pay us back, it impacts our ability to continue lending to entrepreneurs and to families and small businesses that need these funds. So in that sense, it's similar, but it's a much different level of peer pressure than what this sort of peer group lending model is. I guess that's sort of a good introduction, and I think some of the other questions we'll go into a lot more deeply, but I want to hear from Tammy as well, who has some experience on both sides as well.
So building on that, I would say that the model you saw in Paraguay is one model that happens in the States, but it is only one of many micro-lending models we see in the States. And the we see leads to the question of, well, who are we and who am I? I work for AEO, which is the Association for Enterprise Opportunity. It's a 22-year-old trade association of primarily not-for-profit micro-lenders and service providers in every state and Puerto Rico and the other territories. About a network of about 400 nonprofits. And AEO does essentially three things. We do advocacy and research. We do knowledge sharing among the organizations in the network. And we have a program of innovation and new initiatives, which for the last 3 years since I joined AEO, I've been leading. What I would say about all of these models is it's an incredibly exciting time to be interested in or involved in microfinance and microbusiness in the U.S. Nearly 90% of all businesses in the U.S., not all small businesses, all businesses are micro, and we define micro as fewer than 5 employees. If 1 in 3 micro businesses hired a single employee, the country would be in full employment. It's a pretty powerful place where economic activity happens in communities. For the last 2 years, we've spent a bunch of time trying to understand what the structure of this market and what do entrepreneurs need, and we know a number of things. We know that when micro entrepreneurs, whether they hire others or are simply self-employed, get access to capital and services, their businesses grow. We looked at a sample of about 100 businesses that got capital and services from a network of nonprofits, and a sample of about 25 that didn't. And the median revenue, annual revenue growth for those who got capital and services was 30 percentage points higher than their non-served peers. Empirically, there's academic literature that also tells you that startups and others that get small amounts of capital both grow more and hire more. So that's the good news and that's the exciting news. But what we also know is that the underserved market for micro entrepreneurs or micro business owners in the U.S. is huge. Our estimates say that between 800,000 to 1.7 million smaller micro business owners who apply for capital from the large mainstream banks get denied on an annual basis. The field program at the Aspen Institute will tell you that fewer or less than 3% of the addressable market is served by the network of some 600 not-for-profits that do this work around the country. And so while we know that there's a need and we know that intervention in the form of capital and services makes a difference, we also know that there's a huge swath, most of the market, that's not getting served. We would say, and then I'll be quiet, that everybody thinks it's an access to capital problem, but there's plenty of capital sitting on the sidelines that can't flow. It's the combination of a series of structural problems, some of it fragmentation, some of it constrained resources in not-for-profits, that creates higher than necessary costs and challenges around distribution, around product development, and around letting investment flow. But we're seeing all kinds of cool and exciting innovations, some of them technology-led, some of them not, that make it an exciting time, and I will be quiet.
I'm going to ask some questions just to make sure we have all the basic terms defined here. So what are the financial products that people are asking for domestically? This is from my understanding, $100 loan amongst a couple of women borrowers in Paraguay. What are people asking for here Is there collateral back? Is it equity? Is it debt? What is it? Does it look like? How's it different? How's it similar?
Well, I guess I'll tell you what, through self-help, what our typical micro-business loan looks like. And that's probably one micro segment of an answer to what are people looking for. But so most of the small, that size micro loans for self-help, we consider a loan under $35,000 to be a micro loan. And that varies even domestically, organization to organization, sort of what size loan. Some organizations consider a $50,000 loan a micro loan. So there's a broad range. It's not a very set definition, I would say. For us, it's under $35,000. I would say, and we do a variety of loans in that size range. The smallest loan we probably, in many years, have done, I would say, is probably about $2,000. And that, in just sort of looking at what makes sense, the fees when we do a micro loan, we charge a $150 fee as part of our compensation for doing the loan. And so when you get much smaller than that, you start to talk with them about, does this really make sense? There are organizations that do much smaller in the past. We've done some of the 500 under different programs, but I'd say the past several years, the smallest would be about 2,000. Around $15,000 is probably a range that we see a lot of. It's often someone who needs a new piece of equipment. They may have a commercial cleaning business, and they need a new commercial vacuum. Or they may need $10,000 to $20,000 because they've gotten additional contracts for their business and they need to hire one more employee. So they need some money to start helping cover those costs until they start to get proceeds from this new line of work or new contract. And if you range, we do a lot of service businesses, some internet-based businesses that just need a few $1,000s of working capital to really get to the next level. Or frequently they are the need for one specific piece of equipment for whatever type of business it is. Often, if it's a startup business, it's the need for enough capital to help get through that first few months as you start to build your customer base and start to get income coming in that would actually cover your costs. So that in and of itself makes it very different from, for some of the international ones, and both of you can talk more to this. $500 can make a significant difference, a significant loan, and as a percentage of income, it may actually be a bigger amount than the $30,000 loan that I consider.
Yeah, and this is a financial product. You have a history with savings as well, like those savings. So maybe we can talk about the other financial products that are for micro enterprises in the U.S. or internationally.
I'd like to comment because so all microfinance is based on taking on debt and paying it back. So and I'll just comment a little bit on the level. Particularly in a place like Lawrence, Massachusetts, dealing with a lot of illegal immigrants who are some legal immigrants, but who are doing tiny businesses as a part-time activity, other kind of self-employment. Most all these businesses were completely invisible. In other words, they had no visible presence. They were operating out of people's houses, on the street, informally. And so at that level, we were able to sometimes effectively start with a $500 loan, a $1,000 loan in that initial range. But then we found that people tired of the group mechanism, those that were really moving forward, but that start with that mutual support, they were able to move on to the next level. But one thing and just one more point on working capital, because we developed a strategy. Almost all the microfinance institutions, MFI or local ones, do all the operations themselves. But we figured that in order to get to gigantic scale very quickly, what we would do is introduce this very simple, highly replicable methodology and introduce it to all sorts of community action programs, town governments, even the town of Burlington, and other kind of social institutions. They would introduce that methodology with the networks they already had, form the groups and train them, while we, getting lines of credit from CDFI and others, would on-lend that money to the groups. So we handled the financial part of it, and they did the organizational. That enabled us to very, very quickly reach huge geographic spread because the model was extremely simple, standardized, and replicable. So that we had up to 60 organizations doing working capital at one time. But going on to another topic, what I became aware of as we were doing these groups, that a lot of the immigrants particularly were involved in rotating savings groups. They're called tontins, susus, san sociedades, pasanacos, all brought over from their immigrant communities. They would be a group, let's say a group here, roughly this size, or maybe about 10 of you, 10, 15 of you, would join together. You put a certain amount of money into a pot, and then at each meeting, you would get the whole amount collected that meeting, the next person, so on and so forth, until you finish the cycle. So that's a traditional mechanism, which is by far the most prevalent financial institution across the globe. It's informal, below the radar scope. So I was thinking, that I had that sort of in the back of my mind. Then in Nepal, I found an incredible model of microfinance inclusion, which completely reversed the microfinance paradigm from an institution that provided loans to and always back to setting up what you could call nano credit unions. These are working just like the first credit unions created 150 years ago in Germany. 20, 30 people come together, saving money in a pool, making loans from that pool and divvying up the profits. So you can imagine. So I was able, by going to Nepal and Zimbabwe and India, find out about this methodology, introduce it to Oxfam where I work. And this methodology, which is so simple and replicable that we can do it with 1/10 the cost per person and 1/10 the staff, and even in touch a market which microfinance has completely left out. The poorest in rural areas, particularly rural Mali, where our biggest operations are, able to achieve scale. And if we disappeared tomorrow, almost all these groups would continue working indefinitely with no outside support. So this is an incredibly powerful methodology which has skyrocketed in Africa, so that now as many people are in these savings groups, which we call BSLA groups, or savings, there's all sorts of terminology, but as much as an all microfinance taken together, and this is skyrocketed. And so it's an incredibly small investment per person. We're able to create these mechanisms. Then I was thinking, well, as I was going to New York, I found out that every taxi driver is part of a ROSCA. Everybody, all the immigrants are part of a ROSCA. So why not really get to understand how these ROSCAs type structures, all these immigrant type functions are working in the United States. Let's get much more in depth into understanding how they work. And then, after we understand that, introduce them to some of the ideas we've developed through these, through what we call saving for change, or savings groups, in which that rotating group becomes more like a credit union where the money is pooled together to make out loans, which requires more record keeping and so on and so forth. Couldn't we introduce this to the United States? And based on people's willingness to help out within their communities, could they take an active role in spreading this within their communities further, and then eventually at a certain point linking up with credit unions, linking up with banks, and develop credit ratings based on that. So we want to take that, so this would be the second, or third, who knows, revolution of first taking the solidarity group mechanism, bringing it here, doing also to individual lending models, going back out to with all the savings experience all over, with lots of organizations doing it now, with some 7 million borrowers in place doing that, and then bringing these ideas, experimenting with, to see if we could come up with a savings-led model, and then introduce that to all sorts of people that, like high school kids, all the kids are just in debt because you can't, because money just burns a hole in your pocket. You get that little bit of money and stick it in an account, hold each other accountable, and you got a lump of capital, and that builds esteem, and you can move on. It's like 101 or 1 or 0, minus 0, but it's a starting point to launch people up into the formal sector. So I just wanted to, so this is my big next thing I want to do. Now that my wife was also asking me, as she did with working capital, stay home. And then don't spend all your time in Mali, or being shelled in Cambodia. Been shelled in various places, starting here and there. And jumped over, flew over rebel enclaves in Angola and arrived in Sarajevo a few weeks after they stopped sniper shooting and doing a microfinance program, that sort of stuff. And do something back home, she said.
So one of the differences between international microfinance and domestic microfinance is I've never been shelled. In all the loans I've made, no one's ever tried to bomb me that I know of.
So full disclosure, the shelling in the airport in Cambodia had nothing to do with microfinance. But, so Tracy described the working capital loans that self-help offers, and that's representative of kind of typical working capital loans that many organizations, not as sort of well organized as self-help, but that look a lot like self-help offer. The SBA says 50K is the cap for a maximum micro loan. Some organizations put the cap lower. It's somewhere between 50 and 35. Jeff described the Rosca, which interestingly there are emerging models of technology-led Roscas in the US. There's an organization in San Francisco that has essentially created a back-end platform to outsource all of the servicing operations so that any community or organization or not-for-profit that is interested in supporting a Rosca could do it in a manner that essentially you can outsource the back end. The third category of loans that we see a lot of demand for and some real innovation around is unique to the US, and it's around the credit builder loan. Because the credit score is so important in access to capital, those who have thin files or bad credit are, for that reason, frequently left out of mainstream financial products. And so there are a number of organizations with interesting models for credit builder loans. In some cases, it is a secured credit card. In some cases, it is a small dollar, $1,200 loan structured over a year where the payments, $100 repayments are reported to the credit bureaus, which surprisingly is new news to me. A faster way to repair your credit score is to take out new lines of credit and pay them on time rather than repay existing debt. And so there's a fair amount of interesting activity and innovation around that uniquely American challenge of if your credit score doesn't exist or it's bad, you are relegated to turning to Roscos or friends and family or whatever it is that you turn to.
And microfinance is microfinance a good business for self-help? You guys are a credit union, you're for-profit?
We're nonprofit.
Nonprofit, okay.
So, and we've tried to do a lot of analysis of our different programs. Part of, so micro loans tend to be an expensive product to offer versus the amount of revenue you can earn on them. Usually they're very short-term loans. The interest rate, typically, you see a range, but the interest rate typically for a micro loan is probably anywhere from 9 to 16%, would you, in that range, which sounds high to folks who aren't used to sort of small business lending and micro lending, but that's a very normal range.
And just that compares to, think about a business credit card rate of around 22 or a merchant cash advance of 60 to 200. So it may sound high, but it's actually...
Yeah, if you compare product to product, it sounds high because we're used to hearing the low interest rate for strong home mortgages right now. But yeah, it's a pretty reasonable rate. So if you think about a loan that size, you probably have repayment over a couple of years at most. And so the interest you're earning as a lender on those funds, on $25,000, is pretty minimal. Some of the ways that gets addressed to help encourage lenders and mostly nonprofits to do microlending is to allow the lenders access to those funds at a lower than normal rate. So for instance, the Small Business Administration has a microloan program where they will lend money at a lower interest rate than I as a lender can typically get my sources of funds if I lend it back out at, this roughly 10% rate to qualified microloan borrowers. And they combine that also with a little bit of providing technical assistance to these borrowers, because often these are sort of mom and pops, not always, but often it's sort of a one person, wants to start a small business either on the side or maybe they're full time, but it's often people who don't have a lot of either business experience or financial experience, and so often they need more hand-holding and technical assistance than we need to provide when we're doing, a couple of $1 million loan to an established business. So self-help does microloans because we see the need for them. Our mission has been to help serve low-income borrowers, families, rural residents, minorities, women, sort of making sure there's access to credit for everyone, so that we feel like people build wealth through ownership, either their home or their business, that's in this country the way that you increase your net worth. So it's a product that we feel is important because we don't feel there's enough access to microloans yet for low wealth individuals. People who can't borrow money from their family or friends, or people who don't have strong enough credit to go to their bank and get a personal loan to start their business. But it is not something that we would be able to offer if that were our only loan product without some sort of grant funding or outside funds coming in. It is not, and we've spent a lot of time, especially over the past 2 years, longer, but really focused trying to figure out ways we can make it a more efficient product to offer and streamline it to make it less expensive for us to offer this product. But the real way we've been able to continue offering it is that we offer other loan products that basically help subsidize this microcredit product that we offer. Your experiences?
I'm just curious if any strictly microfinance have ever turned a profit or broken even. I know Axiom was getting close to it one time, and Grameen makes a lot of promises, but, which are easy to make incredibly, but hard to pull off. But we never did it.
So
that's for sure.
internationally,
Well, that's a different story. Yeah.
there
Talk
are
about
no-
international as well.
Yeah, so internationally there are, the story of sustainability and scale internationally is a very different one than in the U.S. And there are, compartimentos in Mexico. So compartimentos, the IPO was, game-changing both internationally and for its early investors like Axiom here in the States. There are, I think, the largest microlender in Indonesia. Lots and lots of examples of purely profitable microfinance organizations internationally. In the States, we do not have fully cost-covering not-for-profits. Axiom Texas, Axiom Texas, which is the largest microlender in the U.S., as the name suggests, based out of Texas, but has expanded to a number of places in Delta. They are the largest lender. They adopted an automated underwriting platform that enabled them to scale. They came 4-ish years ago. They were at about 80% self-sufficiency. They made a choice to fund their growth to other geographies. The trade-off between funding their growth and achieving full sustainability. Nobody else is there. There are a number of for-profit or venture-backed microlenders emerging in the States. The reminder that for-profit does not mean profitable. A number of them have swirled around the drain and struggled with the same problems that the commercial banks have in underwriting small-ish loans, and that Tracy described, which is the operating expenses to both do the diligence and prepare the borrowers and provide such PTA, can be quite high. I actually think we can get to a business model that is break-even, but it requires a lot of things to change in the States. We did a back-of-the-envelope analysis 2 years ago now, but it hasn't changed much, that if you try to, at current costs on average for the nonprofits in the industry, if you tried to reach 80% of the market, you would need half of all foundation grant funding in 2009. And when I say half of all foundation grant funding, I don't mean half of all foundation grant funding that went to microfinance. I mean half of all foundation funding deployed, which is to say that the current model isn't scalable or especially sustainable. You could, and we're seeing, you could get high-performing organizations like Self-Help and like a number of others to increasingly improve their productivity and find new models to reach more folks. Technology-led models, new paths to aggregating clients, new paths to standardizing loan products. There are a lot of experiments underway, and that could change the sort of is it a profitable business.
Yeah. I'm going to open it up also for questions, if anybody has any.
I'd just like to comment on the last
Yeah.
point. So this is, the holy grail has been to cover operating costs. And so let's turn this around. In fact, I just wrote a piece just a couple days ago on smart subsidies. And there's subsidies and subsidies. And let's just take the case in Mexico, the Compartamos case. So here you have this huge organization, grown to 2 million. It's a darling of made outrageous profits. It's selling good. Well, let's say from the perspective of the poor women who were actual borrowers. So let's take two models. You take Compartamos, you get $100. Let's say you get $100 up front. You have that $100 for a year. You pay it back, and then you pay an extra $100 of interest. And that covers all the operating costs. Are profitable. The shareholders are happy as clams, and it goes good. So let's take a savings group model that I was saying. You take that same group, because they're organizing groups as well, take that same group, and you save $2 a week for a year, and you have $100. And over that year, you've been able to take out loans from that loan pool as you need them. And at the end of that year, you have all your savings plus a share of interest income. So it's enormously profitable from the perspective of the poor people, the poor indigenous women in Oaxaca that you're looking at. So can we there's all ways of justifying subsidy, but we have calculated, and we're just presenting a vision statement for our field, which is now at 7 million, and it's called 50 by 2000, 50 million. If we were to ratchet up to 50 million people in savings groups, that would cost a total, and these groups would have saved and distributed $1.3 billion a year, with $300 million of profits going back into the pockets of incredibly poor people at a rate of about $20 per head. So is that a smart subsidy? Leaving in place groups that would work indefinitely. We've just seen in our MOLI program return on investment of about 800% into the hands, not to the institutions, but into the hands of people who 60% of whom are living on less than $1 a day, more like 50 cents, 25 cents in the sort of thing. Profits going right into their pockets. So there becomes a case of a small, smart subsidy with all the considerations of scale, efficiency, targeting to the poor, thinking about things, cost effectiveness that could justify it. So it's another way of looking at it. I just wanted to throw that out as an option.
Yeah, you probably start a business school with the savings model. Because, do a whole lot of that here. I have a question over here.
Yeah, I was wondering if you guys are familiar with peer-to-peer lending, and if you think that those models like Prosper and Lending Club have any hope in the U.S.
Familiar enough to be dangerous, and it seems that, not picking a winner between one option or the other, Prosper or Lending Club, that the proof is in the pudding, as it were. They are lending. The last I looked, the growth of loan volume in Lending Club was growing pretty dramatically, and rates were within FDIC guidelines, if I'm not mistaken, of a 36% cap for a small dollar loan. So it strikes me that yes, promising space to watch, but I would bet on one model versus the other, one company versus the other.
And I would sort of second that. I'm cautiously optimistic. I think it is because for each individual who's investing, who's putting money in towards that to lend, it's typically a relatively small dollar amount for the individual investor. I think I think as long as you're only putting in money you can afford to lose, it's an investment. There's high opportunity for losing it. It has a higher opportunity for investment income. Your return on that investment, if it goes well, if it was a good bet, is high versus you could lose the whole thing. So I think it's a good model to watch and sort of, if you get a sense of what amount you're comfortable and maybe even in reviewing some of the different business plans and different opportunities, find some that you either have personal interest in or enough knowledge about to feel like, yeah, they know what they're doing, then it becomes a little more manageable. But I like the idea. I am cautious because people who are investing money to do that lending need to be careful that they know that this is a relatively risky investment. It could make a big difference in those businesses.
And I mean, one of the big questions on what will happen with peer-to-peer is how does the SEC promulgate the rules around the Jobs Act? And so you're seeing sort of two things. You're seeing a ton of crowdfunding platforms emerge that are variations on Prosper and Lending Club and at the Social and Kiva and Lucky Ant in New York and
Things like
Tide Knot and Kickstarter and Indiegogo. And the within that space, there's a pretty broad spectrum of models within peer-to-peer. But part of the question will be, how does the SEC promulgate the rules, and is there something between, there's a debt solution, there's an equity solution, within the equity solution, maybe it looks like SEC has to approve and you have to be somewhere below $1 million rules, but there are equity-like possibilities that the technology enables as well.
That's a good question.
I'm just curious because one of the things that concerns me about microfinance is competition. Because when many actors come into the game, kind of the good fair thing of owing someone, the other ones are looking for clients, and there's kind of a cycle of maybe owing to different microfinance. Like that's the only part I'm a little bit skeptical about. So I was just wondering, when you think about it, maybe if you do think it might become a risk here at some point, or would you share that it might become something hard to deal with?
Sure. I could synthesize it. Is there over-indebtedness in your portfolio where people are borrowing from multiple sources to pay off your loans?
So it's something we look at. So we look at when we look at business and personal debt. As part of what we're looking at is, especially with microloans, it tends to be, we tend to look at global cash flow because a lot of really small businesses don't do a great job separating their personal and business income and expense and debt. So some do, but typically it's all one pot. And so we look at what the universe of debts are. If they have other loans from other lenders, from business or personal, that they are at a reasonable, the amount of income that they're making, whether it's all from the business or there's an outside job in the business, that their total debts, including our new micro loan, will be at a level that they can still afford to make payments and buy groceries and send their kids to daycare. So it's definitely something we look at, and we see a range of, not so much because of other micro lenders, but because of other sources of debt in the U.S. So we sometimes see people who have lots of personal credit card debt that they've used, and maybe legitimately used to start their business, but unless they're making larger than minimum monthly payments that are required on those debts, they're never going to pay those debts off. They're not in the time. If you use a credit card to finance a piece of equipment, unless you are being diligent enough to make larger payments, you will still owe that debt long after that piece of equipment is no longer operating and you have to replace it. So that's part of the counseling that we do with folks when they come to us for and sort of talking through, you need to pay this off before you need to replace it, and you're going to have twice the debt and still only one piece of equipment. So a lot of that goes into it, but I really don't currently, and North Carolina actually has a fairly good set of resources for microcredit as compared to some other states. And we're thrilled for the competition. We rarely find a case where someone has too many micro loans from business lenders. So I see where it could get to that point, but I think partly because of the cost challenges with offering microcredit, it pretty much has to be grant funded, or it has to be somehow subsidized typically. That we're a long way from having too many microcredit providers.
Well, just add that the international, it's a major issue in the international field. When I was in the Harvard League, interviewing market vendors, and the average person has loans from 3 different microfinance institutions, and there's a lot of take out a loan, not be able to pay, take out the loan from the next one to pay back the previous one, and then you get into debt, it collapses, and that's one of the major causes behind the collapse of the micro enterprise industry in Andhra Pradesh and India of just a couple of years ago. It's enormous, and it's a lot of it's driven actually by investors. Investors require them to get to enormous scale extremely quickly before they have systems in place. So they're resorting to an enormous amount of poaching of customers, a lot of poaching from each other. Undercutting the competition by giving better deals. It's a very volatile situation and quite a major area of concern in the international field. Fortunately, not so much here domestically.
So far.
Yeah, so far.
Worrying more about payday loans and
Yes.
check cashing than traditional micro lenders.
I have a question about the role of community building, especially in domestic microfinance. In the video that we saw in the community, there was this network of people in microfinance working to support the woman who couldn't make a loan. Is that something that is also happening in domestic microfinance, and is community building necessary for success?
I'm probably going to rely on Tammy. I can give a short example. So a lot of within self-help, because we haven't used the peer-to-peer model as much, in our lending, I don't see as much of that. We are able sometimes to connect various borrowers, or often they're willing to sort of mentor each other. But one model that I know of in North Carolina that has done a lot of that very successfully, in Western North Carolina, there's a micro lender called Mountain BizWorks. They used to be called Mountain Micro Enterprise. A couple of years ago, they changed their name. They're a great organization, and one of their core models, they've gotten away from this a little bit, but they still do some of it, is the peer group lending where they all go through sort of a business plan writing class together. They work as a group. As a group, they decide which business plans should get the loan. And then that organization, I think, does a phenomenal job of keeping their network of borrowers, whether they've gone through this particular peer group program or whether they're borrowers who they were able to lend to without them going through that program. Mountain BizWorks does a phenomenal job of tying all of their borrowers together, doing lots of networking, making sure they're aware of each other, really stressing the interdependence, and that works very well. I think there might be some industries where competition among different providers starts to make that difficult, but especially in that community in Asheville, it's such a service, tourist-oriented, a lot of those businesses community that I think there's a lot of benefit, and I think they've seen a lot of benefit from sort of getting these businesses to be able to work together. But through AEO, you may have a lot more.
Mountain BizWorks is a great example. I think you see community building in sort of three ways. You see connections to customers, so a lot of market access work, creating opportunities within a community to feature the products and services of the client businesses, to basically create market access. You see a fair amount, and different organizations do it differently, of connecting entrepreneurs to each other. So Make Mine a Million, or Count Me In for Women's Economic Independence, is a fantastic example of an organization, primarily online, but also in communities, that is all about fostering small ecosystems of women in communities to connect, women entrepreneurs to connect to each other, and then they do a contest that's a little bit of American Idol, which I don't have to watch, but I'm sure it looks like that, and Top Chef, which I do, that looks like that. And the third place is connecting entrepreneurs to mentors. And this is a place where technology is really changing how it happens. So there's a very exciting Match.com-like platform called Microfinance that connects entrepreneurs to mentors, and they have existed for about 7 years. They were incubated out of Mercy Corps, which is a global development organization. They have had shockingly and extraordinary results. Axion USA, or Axion East, does a fantastic program with Boston Beer, Brewing the American Dream, where the founder of Boston Beer Company and their team gets together on a monthly basis in cities around the country where there are Axion US lenders, and it's like it's a speed dating event where this is the marketing table and this is the operations table, and experts from Boston Brewery flies in experts. They sit around the table, you get a couple minutes to present your issue, and then folks connect afterwards. So there's all kinds of, the short answer to your question would have been, yes, there's all kinds of efforts to build community. And it's a big part of success.
And just build on that, we have these working capital groups scattered and all over New England, scattered in the little villages, towns here and there. And when we rated and we tried to give all this training, but they always by far the highest rated part was the support that the peers gave each other. Somebody knew a little bit more bookkeeping, marketing, and the service. So they helped. And long after they stopped borrowing, much to the detriment of our bottom line, a lot of these groups are still intact and helping each other out informally. So and it's certainly the case in the savings groups internationally, where the solidarity and mutual assistance is rated higher. Number one, second is place to save, third is loans, and around fourth or fifth is business development. So that social capital aspect is extremely important in certain populations.
Capital is important, but technical assistance and sharing stories is also super important.
Except I hate the word technical assistance.
say. What do you want to call it?
I'd call it business support services, but I would be absolutely eager to hear a better name for it.
Think about it by the end of the panel.
Exactly. Maybe we'll do that at the next AO conference. Because I'm like, you don't, technical assistance has no meaning. Like it's inside baseball word. If you assistance, and I thought you bringing engineers to build a refinery, it doesn't have meaning. That's my opinion.
Very important.
Something I would add, just as we're talking about cost, is I think Jeff raises a good point about the issue of, obviously, you're in business school. One of the critical things that we all think about is how to make microlending sustainable, how to make it self-sufficient and break even. And I think Jeff raises a good point that is also worth thinking through of, so we can focus on that and do all that we can to make it as sustainable as possible. But we can also focus on ways to subsidize it or why to subsidize it. Because the income that microlending brings to self-help, so it brings to me as a lender, is one of the minor benefits, and very frankly, is not much of a benefit of microlending. The other benefits of microlending, and we have example after example after example, all of us would, of this, is, so we did several years ago, I think, maybe a $5,000 microloan to a contractor who needed the money in order to be able to get his actual general contracting license so he could start to bid on larger jobs. At the time, I think he had 1 or 2 subcontractors working for him, so not even employees, just contract workers that he would hire job by job. Subsequently, after he got his general contractor's license and he was able to start bidding on bigger jobs, he of course needed to come back to us and get a slightly larger loan because he had to start paying people before he could get his money flowing back in from the completed contract. So we probably did maybe a $10,000 or $15,000 loan. He starts doing a little bit better, over time, gets that one paid down. Again, comes back, I think we did a third loan of around $25,000 for him about a year ago. And that one, I think, was partly he needed some new equipment for a contract that he had gotten. He's been a great borrower, paid us back, and I think that's an important point, is we work with low-up borrowers. We have a very low default rate on microlending. They're serious about these businesses, they pay us back, and we work with them a lot. We stay in touch and in contact to sort of help make that an easier process. But back to this original point of this story, sorry. So we talked to him a couple of weeks ago. He got in touch to let us know that he has recently been able to he started getting $1 million contracts. He's been able, on the strength of his business growth over the past couple of years now, to go to a conventional bank and get a $100,000 line of credit so that he can fund these jobs and work. And he's gone from having 1 or 2 subcontractors that he could pay, contract work some of the time, to having 25 employees that he has on staff all of the time. So the benefit of these tiny little loans over time that helped him grow exponentially, the impact of that is phenomenal. And that's not always the story. There are some microloans that the business was a bad idea, or it was a long time, or that don't work out. That then we have to figure out other ways for this person to be able to pay us back from outside income so that they can move on. But I think all 3 of us have lots of examples of when this works. It works really well at a relatively low risk, and so it's worth subsidizing.
Any questions? I'm going to also maybe bring back home a little bit to the MBA community here and talk about what does the kind of future of the industry look like, jobs-wise, or just very interesting ways that you can place yourself in this industry to be on board the growth that might be there? Is it maybe from being a lender yourself, or working with self-help, or being a part of the ecosystem, building it? What are the interesting nuts to crack in your mind?
I was looking to do I can talk a little, but yeah.
I'll start, and I mean, I think there are a number of places where one can have extraordinary impact. There are social venture opportunities. It's the intersection of technology, whether it is venture-backed technology companies that, like Progressive Financiero or On Deck Capital, or Cabbage, that are bringing the notion of small dollar loans to large numbers of micro entrepreneurs, whether it is a hybrid business model of bringing, part of the challenge with big data lending is while it looks like it works, they're still relatively expensive loans. There are opportunities to bring that technology through not-for-profits who have lower cost of capital to micro borrowers or micro business borrowers. There are real opportunities. I don't know if one gets an MBA and then decides to go do it, but if part of it, the training as an MBA is leadership and finance and a range of things, there are a number of fantastic not-for-profit organizations that need either new leadership or have sort of growth opportunities. Third way to get involved is, I would strongly plug, because it's very easy to do, something called Bankers Without Borders, which is the Romine Foundation's volunteer corps. It is a pool globally of, I think it's 7,000 individuals with skill sets and talents from all over banking and other institutions that perform projects related to microfinance. So full disclosure, we are their exclusive channel for partners in the U.S., for projects in the U.S. But it's really interesting project work, and beyond the U.S., it's really interesting opportunities to work on projects internationally. And the other piece of it is it's great networking because you're working with folks. Right now I'm working with a team from J.P. Morgan that runs one of their asset management businesses in Paris, who is helping us figure out the potential economics of a loan guarantee fund. And it's good stuff. So those are three ways that somebody with an MBA profile might get involved in micro. And if somebody wants an internship,
We have cards.
I was going to say, do I have collateral?
The hot, where's the point of contact for folks that they should be focusing on this?
I think, I think in the video it was mentioned there's 10,000 MFIs, but you'll notice when you're looking at the data, there's only 13 MFIs that are $1 million or more, and another 270 or so that are between 100 and less than $1 million. So, and the great bottleneck of almost every one of these is management systems, thinking through service delivery at scale. So all of us have grappled with this issue, but most of the projects are sort of boutique things done out of your back pocket, small scale, highly subsidized, low loan repayment. And if you're really going to go for scale, you have a vision of scale. I think somebody said, I remember it was a conversation I had earlier today. They said, well, I'm trying to get my first business. I'm not sure if I wanted my first business or my 1,000th business. You got to have a vision of scale and a capacity. So the capacity to actually grapple with these issues and with the management skills you have. There's tons of ideas out there. Great ideas, wonderful people, but it usually falls flat on the actual delivery. And it's the personality type is being an NGO, doing things very much hands-on, And the vision of reaching scale and effectiveness is often lost. And we need the kind of skills that for the people in the panel before us had to think in those terms to really do this effectively. Fortunately, savings work is a lot simpler, but still, the whole process of driving towards scale. How do we get to 460,000 women in modeling in 5,000 villages in a tiny fraction of the time? It was all about the organization of service delivery and monitoring and accountability. But just, you mentioned volunteers. One of the best ways of getting your feet wet in the real world is to be a Peace Corps volunteer in this particular area and grapple with these issues on a day-to-day basis, and just because that gives you, anchors yourself into something resembling the real world.
How many people here have volunteered in microfinance in one time or another in their career without pay?
I don't understand the question.
I've volunteered at Axiom San Diego.
Yeah, right.
You were a Peace Corps volunteer.
Not in microfinance.
I think it's pretty common.
Self-help was my first real, it's about 9 years ago, my first real dive into what microfinance.
But to your point about we have to use our products as close, we're seeing that that's really exploding. We or develop specific products. Our folks in that market in Brazil are seeing, so India.
Through its own set of transfer.
Job or in that type of business or volunteer, and that they need to do it for real, because it's going to be very different than it is on paper.
Pretty loud laughs.
Luckily, many take that advice. That's fairly critical.
Well, then you're fortunate to be in where you are, not just because you're a Duke, but because there are some fantastic organizations in your neighborhood like Self-Help and
support center, the development center. There are lots of local organizations, and just being so close to the state capitol, lots of ways to get involved in some policy work.
Excellent. Well, I guess this is a 5-minute warning there. If there are any last questions, there's one question.
Well, I'll just make a little follow-up plug for self-help, since you mentioned something about being in the neighborhood, which that prompted this thought, which is just to point out. Apparently, quite a few people don't know that you can actually open a bank account at Self-Help and deposit your money, which is one way that you can support the work that Self-Help does. So not only for your checking and savings, but they have great money market accounts that are much better than Bank of America or any Wells Fargo, any of those. So great
funds are still federally insured. Perfectly safe deposits. But yes, thank you. I appreciate that. Yes, we do have full service banking, which years ago we did not have. But as we've expanded and we've added a lot of different smaller credit unions to the Self-Help family, we have a much more vibrant personal, especially for personal banking, but also for small business banking. And yes, we would love your deposits, and we will invest them in things like microloans or redevelopment of distressed low-income areas. And so, thank you for the plug. I didn't pay her anything.
What's your
But I'd like to make a plug too.
As a credit union, you have a catch plug. Can anyone become
Anyone can become a self-help, because our mission is, so we don't have a membership like you think of sort of company credit unions that you have to work for the company to be a member.